leverage as it heads into these talks, particularly as it tries to show, look, hey, we can try to put the squeeze on some of your big names over there, you know, those that are very important to the technology space over here too. But we're also seeing that NVIDIA chips also reportedly in focus. Chinese customs authorities are going to be stepping up the scrutiny according to the Financial Times. And sort of my read into this is that we've heard a lot about, you know, leakage, sort of backdoors through Southeast Asia, etc., with China seemingly has been turning a bit of a blind eye to. But I'm just wondering, you know, how you're reading into the reaction NVIDIA today off the back of this report.
Yeah, frankly, I didn't realize the mass, really black market we're seeing in the nation for these most advanced chips, as we did see per the Financial Times. To your point, Sam, they reported at least $1 billion worth of NVIDIA's top AI chips were smuggled and sold in China in the 3 months from May on. So that goes to show there's still an appetite wholly in the country for these most advanced processors. But China's recently now stepped up its enforcement of its controls on chip imports as Beijing does seek to wane the country's technology companies away from U.S. products, very specifically the targeted processors being NVIDIA's H20 as well as RTX Pro 600D, which are designed to adhere to U.S. export controls and also maintain their market share in China. But checks have been extended more recently to more of the advanced semiconductor products. So this is going to be more wide-reaching. And again, another bargaining chip, it feels like, or another sort of attack back from Beijing on Washington as it's targeting the mass demand that we still are seeing for NVIDIA's most advanced chips. NVIDIA's guidance doesn't include any revenue impact from China. I do think that's important to note, but not exactly what you want to end the week on, although NVIDIA is shaking this off quite well as we're actually higher in NVIDIA shares currently.
Yeah, it's interesting, isn't it? Because I heard an interview with BYD recently saying, hey, look, we haven't been told by Beijing to not use NVIDIA chips, but even if they do tell us to do that and the directive comes, hey, look, we've got a backup plan. So it's really interesting to sort of see this dynamic and this whole story playing out. But thanks for filling us in with that piece of the puzzle, Jenny Horn. I'll catch you a little bit later. Let's trade it now with Dan Deming, Managing Partner, KKM Financial. How are you approaching your example trade for Qualcomm? Good morning to you.
Good morning. Yeah. As Jenny pointed out, I mean, there's some headwinds here for Qualcomm, at least short term, and maybe it is a bargaining chip that's being used in the negotiations. But overall, when you look at it from a technical standpoint and a pricing aspect, it appears to me that it's making a lower high here, potential for some downside. So I'm looking at a trade example today to capture some downside, but have the opportunity to get put into stock at a better level. So I'm looking at buying a November 165, 155 put 1x2. You can put that on for a 50-cent credit here, so you get paid to put this position on. Gives you a break even down to 145, which corresponds with the August lows. And so if we do see some weakness over the next 42 days, this will capture some downside and give the opportunity to get maybe long the stock at a better level. If it moves higher from here, still get to collect the credit on the put spread and therefore and see where the stock goes from there. But it doesn't cost anything to put this trade example on. Gives you some downside protection down below that 155 level and then possibly even get put in the stock at a much better level.
Okay, good look at Qualcomm there as we are continuing to track these lines out of China in this investigation. Just want to park that there now, Dan, and get your overall thoughts on the market action today as we continue to hit these sort of fresh all-time highs, certainly for the NASDAQ. We're on another sort of winning streak, it seems, for the week. What are your thoughts?
Yeah, it's interesting that we're able to hold these levels, and we look at the NASDAQ and the S&P possibly putting on a new all-time high as well. Now, the Russell and the Dow are under a little bit of pressure here, but really just off their all-time highs. What is interesting is what you and Joe spoke about, just the dynamics in the market, the dollar moving higher with gold moving higher. You know, there are a lot of cross currents here. The VIX at 16, now historically a lower level for the VIX, but you look at realized or historic volatility, it's running around 7. So in theory, the VIX is too high at these levels. As Joe pointed out, we have not seen a 1% move to the downside since August 1st. So there's a lot of cross currents in this market, a lot of head scratching, but overall, price is king, and we continue to see that upside momentum in the equity markets. And holding on to these levels today, I think, is key for the sentiment going into earnings next week.
Yeah, and as I said, we're going to be hearing from 36 S&P names next week. The financials, no doubt, the first cab off the rank. Dan Deming, thank you so much. Have a happy Friday and a great weekend ahead. Appreciate your time, Managing Partner, KKM Financial. Coming up, we will take a closer look at the sectors on the move this morning and the news moving markets overseas. Morning Trade Live. We'll be right back.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Vardas, coming to you live from the floor of the New York Stock Exchange today. It's time to take a look at the sectors that are moving markets this morning. Kevin Hinks joins me from Chicago today. Happy Friday to you, Kevin. What stands out to you about this market today?
Well, it's certainly a broad rally that we're seeing here. I've got 8 of the 11 sectors of the S&P 500 higher, and frankly, one of them is unchanged, so it's virtually 9. What's not up? That's pretty easy to figure out. It's energy, with crude oil breaking $60 briefly, now hovering right at the $60 level. Energy stocks are under pressure. Also, real estate under pressure today. Besides that, we have industrials that are basically unchanged. The rest are all green, Sam. It's not a big up day, but it's certainly a solid up day. And if you look at individual names, you know, NVIDIA, Broadcom, Apple, Google Alphabet, all higher. Oracle's higher. It's a good solid day. Not all the stocks up, though. Microsoft is down fractionally. Meta Platforms down fractionally. Healthcare stocks are a bit heavy as we start the day. But that being said, this is a good, solid way to end the week. We got data around 9 o'clock on consumer sentiment. It came in, let's call it unchanged to a few weeks ago, but that was higher than expected, as the expectations were for it to be dropped to 54. So this is a market moving along. And here's the key things I'm looking at, Sam, as we move into midday here. The dollar lower. Why? Well, it's a rally in the Japanese yen that has been under pressure lately. It's back up about 0.4%, which has the dollar lower. Yields sitting right at 4.1%, slightly down on the day. And then, of course, if crude oil breaks $60 and ends with a 5 handle, that's going to be headlines all weekend, Sam.
Yeah, absolutely. We're going to be watching those developments in the Middle East when it comes to commodities and gold, just recouping that 4,000 mark as well, holding steady too. Kevin, thanks for a broad breakdown of the market action today. Really appreciate your takeaways. As always, Kevin Hinks there. Let's widen our scope and take a look at some of these global markets, because Tesla's made in China cars are seeing a slight pickup last month. Shipments from the Shanghai factory rising 2.8% year on year, a return to growth after 2 months of declines. This partly being put down to the launch of the 6-seater Model YL. Tesla's main Chinese rival, however, BYD, seeing its first year-on-year sales drop this year for that month. Meantime, China has slapped Canadian research company Tech Insights on its unreliable entity list. The firm is known for its semiconductor coverage analysis and tear-down reports, including on China. It recently revealed that Huawei's AI chips were made with components from other countries, like in South Korea, raising questions about China's tech self-sufficiency. Being placed on that trade blacklist means Tech Insights is banned from working with Chinese businesses and unable to retrieve the data and other information it needs from organizations in the country. And we continue to track the political developments in Japan. The ruling Liberal Democratic Party facing uncertainty after the governing coalition collapsed over a disagreement on funding issues. The move dealing a blow to LDP leader Sanae Takaichi, just as she was on track to become the first female prime minister. The announcement coming after Japanese markets had actually shut for a long weekend. The Nikkei ending lower on perhaps some profit taking after record highs this week. But as Kevin pointed out, the yen strengthening off the back of the news after what has been called the so-called Takaichi trade, which saw the Japanese currency actually slumping and equities soaring this week. All right, well, coming up, it is time for Inside Out, and we will take a closer look at Alphabet and bring you an example trade on that name when Morning Trade Live comes back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
We're back on Morning Trade Live. Let's focus on Alphabet. Shares are up nearly 30% this year, and nearly half of that gain has come since September the 2nd. That's when a district court ruled that Google would not have to divest its Chrome browser as part of an antitrust case. Alphabet hit its all-time high on September the 19th, and shares are trading just 5% below that mark. Wedbush has a $245 price target on Alphabet, and joining us now is Scott Devitt, Managing Director of Equity Research at Wedbush Securities. Thank you so much for your time. So we're not far away from $245 right now. It seems that very much the latest that we got out from the authorities seem to have lifted an overhang off the stock. Where do you see things moving from here?
Hey, good morning, Sam. The tightness with the target, I wouldn't overly focus on that. The stock's moved a ton since last earnings on that announcement, as you mentioned, and it's up about 35-40% since this summer. So, we'd like to see more results before making modifications to our model. But I think the backdrop has gotten significantly more positive for the company because of that determination, which has been an overhang on the stock. And then just more generally, because the company seems to have kind of been able to power through this period of being positioned as an AI laggard, back to now being an AI leader again, given the underlying strength in the business recently.
Okay, so you believe that there is a compelling case for multiple expansion. What else sort of offers a tailwind here?
So, this company's original mission was to organize the world's information and make it universally accessible and useful. And so,
I got to make a phone call.
I guess I would argue at points in time when it lacked competition, it maybe got caught up on being addicted to the drug of monetization. And so this whole new wave of innovation actually has the potential to be a net positive for Google because it's forcing this giant to act in ways that it wouldn't naturally have done on its own, and it has all the assets to be able to be very competitive. And you're seeing that with the integration of AI overview into search results and really throughout the entire platform. Now that this AI innovation wave is underway, and so businesses, the multiples already expanded a little bit from 17 to the low 20s. It's more on par with where Meta trades now. But I think on an ongoing basis, this company has the ability to grow revenues low double digits with some operating margin expansion over time. And so you get like a 15% operating income growth rate and a stock that probably has a return that's similar to that over the next 3 to 5 years on an annualized basis.
Okay, so the biggest regulatory headache certainly coming from here in the US, maybe in the rearview mirror right now, but now it's facing, I believe, scrutiny over in the UK as well. I mean, how much do you think that this is going to impact things? I mean, even with some of these headlines this morning, the stock is still up. So what's your read on it?
I don't think it should be overly focused on the government scrutiny, because really going back to Microsoft many years ago, the government, whether it's the US or the EU, you end up with these massive companies paying modest fines, so that the regulators can seem like they accomplished something. And then they keep going on about their business. If you look at the Western world, particularly US regulators, there's an interest in having large companies that have been successful continue to be successful in this battle against China. When you look at the EU, relative to the US, I think that there's just not enough that can be done there that's problematic to really slow down the pace of the company. So anytime there's an opportunity that presents itself around, government scrutiny, we're usually on the other side of that. And you've seen the outcome of that in the determination in the US recently, as evidence of why that should be the case.
Okay, got it. As I mentioned, the stock is up today in trade at 242 and change. Scott Devitt, always a pleasure. Thank you so much for joining us today, Managing Director of Equity Research at Wedbush Securities. Appreciate your time. Let's trade it now with Tom White, host of Fast Market. And you've got a pair of example trades for us on Google. Talk us through your sort of neutral to bullish approach. Good morning to you, Tom.
Morning, Sam. Yeah, the way that I looked at this is it's run up 28%. It's just about 5% below those all-time highs. If it starts to consolidate, I believe Scott's price target's around 245. If you think it's going to continue to move higher or kind of consolidate, which we've seen in the market this week, this strategy takes advantage of it. So I went out to the October 24th weekly options. You're going to avoid earnings, which are on the 29th. So you take advantage of maybe some upside exposure, but at the same time, you avoid that earnings event. We're going to sell the out-of-the-money October 24th, 237.5 strike put. And then to make it risk defined, we're going to buy the 227.5 strike put. So a short $10 wide neutral to bullish put vertical. You're going to collect roughly about $2.25 on this put vertical. That's what you can make on this trade, $225 with about $775 in risk, but that's all the way below 227.5. So you're giving yourself a cushion to the downside of about 3% below the current share price, above 242, before you start getting hurt on a trade like this. The probability that that short 237.5 strike will be out of the money at expiration is about 64%. So that gives you better probabilities of success, and that's the trade-off why you have more risk than the reward. The idea here is that you do not want the stock to go below that break even, which is about 235.25 to the downside on this neutral to bullish put vertical.
Okay, and you've got a sort of a more neutral example trade for us on this name. Talk us through that one.
Yeah, this one's got a little better risk-reward setup, but it's range-bound. It's relatively neutral around Scott's price target of about $245. So I went out to that same October 24th weekly options where I can avoid that earnings event, but take advantage of positive time decay or positive theta on this type of strategy. A short iron condor is a neutral strategy. We sometimes refer to the one that I'm bringing you as a short iron butterfly. Because we're using that same common strike. So here's the setup on it, October 24th, weekly options. You're going to sell the 245 strike put and the 245 strike call. So you're selling a straddle there on the 245 line. That's where you want the stock to go. And then to make it risk defined, we're going to buy on the downside the 230 strike put out of the money to the downside, and then buy the 260 strike call on the upside. So it's a short $15 wide short iron butterfly here. You're going to collect roughly about a $9 credit on this neutral strategy. That's what you can make, up to $900, but it has to pin around that 245 level. Now, where's my break evens if I collect that $9? It's going to be 236 on the downside and 254 on the upside. So that's the range you want the stock to stay in over the next 14 days. You've got about 3% cushion to the downside before you get hurt, or about 4.5% cushion to the upside, but you're trying to pin that 245 line. But the idea on this type of strategy is you collect $9 credit, but as time decay or theta contracts the price of this, you want to buy it back cheaper, right? You want to buy it back at, $5 or $4 or even $7. That's the whole concept of this neutral strategy that takes advantage of falling implied volatility and positive time decay.
Okay, a good look at Google Alphabet this morning. Thank you so much for that, Tom White. As always, happy Friday to you. And thank you for joining us here on Morning Trade Live this morning. I'm Sam Vardas. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Trading 360 is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down